Companies in which we own stock. Take See's Candy, which we own. See's Candy has paid everything virtually out to us that they've earned because they do not have the ability within See's Candy to use large sums, which they earn, intelligently in their business. So it would be an enormous mistake for See's Candy to retain money. So they distributed Berkshire, and we hope that we move that around in some other area where that dollar becomes worth $1.10 or $1.20 in terms of present value terms.
This video is all about dividends and what you can do to actually live off of them according to Warren Buffett.
Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all.
We're going to go through all of what dividends actually are and how you can be making an income just living off of dividends from the stock market.
We like the companies in which we have investments to pay to us the money they can't use efficiently in their own business. In some cases, that's 100% of what they earn. In some cases, it's 0% of the earn. We own some stocks that don't pay any dividends.
Now, before we get started, of course, you really want to understand what dividends are. You always want to understand what you're investing in when it comes to the stock market and, what kind of returns you are potentially going to get. Dividends are essentially passive income. What it does is, if you invest, let's just say, $1,000 into McDonald's stock, then McDonald's every single quarter would give you a percentage. So McDonald's is paying out 2.22% in annual dividend yield, and that equates to $1.67 in quarterly dividend amount at this very moment of recording this video. So every single share that you invest in, let's just say in McDonald's, for instance, then they pay you $1.67 every single quarter. Quarterly amount equals 4 times every single year.
In stocks, it's so easy. It's easier now than ever because you can do it online. Just you click it in and maybe it goes up a point and you get excited about that and you buy another one the next day and so on. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one in the rest of your life, you would think a long time before every investment decision. And you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to.
If you're going to invest in large sums, let's just say of individual stocks, then you're going to be making a heck of a lot more than $1.67 every single quarter. Warren Buffett once said, "If you don't find a way to make money while you sleep, you will work until you die." And of course, dividends in particular are something that you will earn passively when the stock, of course, let's just say a stock also, when you're invested in McDonald's, let's just say, if you, let's just say, have a 5 to 10 year investment in McDonald's stock, then, you're going to get a dividend payout every single quarter for however long you hold the stock. It doesn't matter how long you hold it for. It could be 5 to 10 years and so on. But the point I was trying to make was, let's just say you have a $13,000 investment in McDonald's. So, and then you take it out after 10, 20 years or so, whatever it is. Then you will be making all of that money in dividends with the $13,000 that you invested in McDonald's. You're getting paid dividends every single quarter, and let's just say you take it out 10, 20, 30 years from now, then you're also going to be making however much money that stock is, let's just say 20, 30 years. You're making money in both ways. The stock itself, how much it goes up.
The equation is pretty simple, but the practice doesn't necessarily follow logic. It's obviously, as long as you're telling the truth to your shareholders about what's going on so that you aren't manipulating the stock downward or something.
If you're a stock holder, then you hold that stock and you get paid dividends, quarterly. Now, these dividends are normally in the form of cash. However, there are some companies that actually pay you in the form of additional shares. And if you're doing any sort of taxes or anything like that, then that's not the worst thing in the world by any means, by gaining additional shares in the company that you're already invested in. Really, you just have to take a look at what particular what particular companies are doing that, what particular companies are paying the best dividends, or if they're paying out additional shares, and so on and so forth. When you invest into, let's just say, McDonald's, then a dividend is your slice of the particular pie that you're investing in McDonald's stock. And when McDonald's makes a profit, then you benefit from them making a profit as well by gaining money, a percentage every single quarter and in every single share that you're invested in, let's just say with McDonald's. And that's pretty awesome. So every single time you invest in a stock that pays out dividends, then you will be making more money every single quarter or every single year, essentially, depending on what company you're investing in. And that is something that is going to really make your portfolio shine even brighter every single time you buy a certain company, buy into a certain company that pays out a dividend.
When a stock can be bought well below its business value, that probably is the best use of cash. It's something the Washington Post did on a huge scale back in the 1970s. Teledyne may have bought 90% or something or close to it of their stock back. And that was the reason a very significant percentage of companies bought stock back in the past, because they actually thought it was selling for less than it was worth. Like I say, that can be abused if you do various things to bury your stock in one way or another. But that wasn't the usual case.
A really great way to invest in stocks and really build your portfolio is diversification. You don't want to put all of your eggs in one basket. So a really diverse portfolio could mean domestic stocks, bonds, money market, all of those sorts of things, and really taking a look at the best individual stocks or mutual fund and things such as that will really diversify your portfolio and will really make your your diversification that much better. Like Warren Buffett once said that our favorite holding period is forever. And there's a reason for that. It's because if you're invested in a company that pays out dividends every single quarter and you don't need the cash necessarily, like Warren Buffett has said this himself, you don't really necessarily need, to pull out all of your funds from that particular individual stock of, let's just say, McDonald's or Chevron, Heinz, and so on, Kraft Heinz. And so every single quarter, you're going to be making X amount of dollars in dividends just by holding that particular stock. Once you pull out all of your, holdings from, let's just say, from McDonald's, then you're no longer going to see that, that sort of dividend from that particular company. Once you're gone, you're gone. And of course, economic conditions can definitely move around a lot. I mean, look, an investment that you made 10, 20 years ago may not be the best move, may not be the best thing for you to have right now to maintain that particular share, that particular stock, let's just say, and you may want to sell off your shares. So you could essentially monitor the risk of investing in certain stocks, like let's just say PepsiCo or Chevron, McDonald's, and so on. And whatever company you're invested in, then you want to make sure you're making that company itself makes a profit and also potentially pays out dividends and gives you that $5,000, $6,000, $7,000 and beyond per in dividends, per quarter, annually, and so on. And so really you need to assess the risk. Okay, so let's take a look at blue chip investment stocks and the strategies that you can invest in these sorts of dividend stocks to maintain a great portfolio and make even more money. So if, Apple was paying, 20, let's just say 20 cents a share the last quarter, then they actually did, increase their dividend payments recently. If you were invested in Apple stock, McDonald's, Costco, Waste Management, these stocks are considered blue chip stocks. Stability, income, long-term capital appreciation. So if you're investing in a company that has long-term growth and is a company that operates in industries with substantial potential for expansion, so a great example potentially is Apple. Apple is growing all the time. If you take a look at their stock, then we're talking every single year, most of the time, Apple has been expanding their lineup of goods. So the Apple Watch, the iPod, new versions of the Mac and the MacBook, and the list goes on and on and on. The iPad, you name it, Apple is a company that looks to expand. Apple Pay, with every single thing that a company, introduces and is moving their particular company forward, is really a fantastic company to potentially invest in. A company like Xerox, I'm going to use the very famous example that Steve Jobs has talked about, like either Xerox or Pepsi, and you can take a look at those. If you know what I'm talking about, you can take a look at those interviews with Steve Jobs and how he's talked about a company like Pepsi or Xerox really don't do too much in terms of moving a company forward, aside from doing a few things like changing the size of the bottle, which is obviously a joke, but Steve Jobs has once been quoted as saying that with his particular interview that came from him. So if you're going to take a look at potential growth stocks, then Apple is a great one, and there are a bunch of others as well, but I'm just using that example when we're talking about growth stocks here. I'm sure you're going to have a ton of questions potentially if you are a beginner, and I can definitely try to do my best and help you out in that way. And of course also subscribe, because I'm going to be talking a lot more about income, every sort of income under the sun, particularly passive income on this channel going forward. So remember to leave a like, comment, subscribe for that, and also take a look at the links in the description as well. Thank you so much for watching, everybody, and I will see you in the next video.